Tonight I'd like to talk about the NQ Minerals story. Whilst we've been on the NEX or similar list for a few years, we have just recently acquired a significant asset, and we believe this is going to take the company a long way forward. As an introduction, we must note that there's a disclaimer here, and there is forward-looking statements that I'll be putting forward to you tonight. We have a very good project now we've acquired in Tasmania in Australia. The project I'll talk about tonight. We also, during this time of the acquisition of this project, we've brought on a very highly credentialed team of experts that some of them have worked at this project, including myself. And we're also developing our high-grade polymetallic projects up in North Queensland. And look, to get this rolling, I've got a video, because this project is very impressive, and I believe that the best way to see this project is have a look at this video. So, if I may. Replacement value of this mill, and this is a state-of-the-art mill in 1988, and now is still a very, very good mill, would be about 480 million Australian dollars. Yeah, it's a very impressive project, this one, and I've only got a short time, so there's a lot to get into to talk about in this project, but I'll keep it pretty brief, if I may. The project's fully permitted. It has an IRR based on the work we've done recently with external consultants of 130%, with a NPV of 210 million US dollars, which means a 19-month payback. A very, very low capex requirement needed to get it up and running in the next 6 to 8 months. As you saw in that video, there is all the infrastructures in place: rail lines, ports, the dredge, and the flotation plant. And as I mentioned, it's a very short startup time. NQ, we've got a strategy to get this project up and running as fast as possible. We're going to develop our high-grade deposits up in North Queensland. We also have some upside with this project. When we finish the tailings, we've got excellent deposits sitting on the mining leases that we can rerun through the plant and use the empty tailings dam to fill up. We're going to look for other similar projects. I won't go into Tasmania too much, but suffice it to say, on the west coast, it is a good jurisdiction to be in. It's a mining province. There's lots of mines down there, and there's a lot of mine workers, and we're welcome in Tasmania. The government's very good. So this is just a bird's eye look at the dam itself, and you can see it's a significant tailings dam. There's only 1 metre of water covering 10 million tonnes of very high grade material of metals. So we've got about 800,000 ounces of gold and 32 million ounces of silver. We're going to be treating the material via a dredge through pipelines up into a mill and be producing 3 concentrates. Those concentrates are all marketable, very saleable. We're producing a lead, silver, gold concentrate, a zinc concentrate, and a precious metal concentrate hosted in pyrite. It has had a good history. Essentially, Hellier was started by Aberfoyle in 1989. It was a very, very high grade deposit, and hence why it spilt a lot of tails into the tailings dam, and why the tails are so high grade. There has been a group that did have a go at treating the material, and which basically set us up for what we're going to do, and gave us the knowledge and also the costings on how that process worked. And we purchased it and completed that purchase in May. So our investment case essentially it revolves around a project that's a very low risk. It's got very high margins, and we only need about 15 million US or 20 million Oz to get it up and running, including working capital. We've got markets for our products, the 3 products that I told you about, the 3 concentrates, and at the end of the day, it makes a lot of money, and there's going to be a lot of shareholder value. I showed you the video, but this plant is key to this project. It's undercover. It's quite big. It's the size of a football pitch, and it's been retrofitted with some of the highest state of art sampling equipment and XRF machines that the mining industry has. So it's an up-to-date plant, even though it's 20 years old. In relation to where we're at, we've purchased the project. We're now looking to find 15.4 million US to get the project up and running. As I said, we'll be doing that over the next 6 to 8 months, and we are going to be producing some nice cash flow. So there'll be free cash flow of about 34 million US a year for 10 years, and the revenues are over a billion Aussie, or $1 billion US, and 1.3 billion Aussie. As I said, 10 minutes isn't long, so I'm pushing this through very quickly. But in summary, we've got a great management team and a great board. Our chairman's here tonight. He's up the back, and he'll be happy to take questions later. We've also got our financial director here as well, and he'd be happy to take questions. We've got a very safe project with a good JORC resource, and it's very convertible into reserve. It's a low cash cost to project with a 56% gross margin, and therefore will be very safe in the dynamics of base metals and precious metals over the next 10 years. And we're looking to start this up by probably March next year, and we've got a team that's prepared to do that. How'd we go? Done. Thank you.
Good stuff, Roger. Do you have any questions, please, for Roger? I'll kick it off. How did this come to you then? Did you work on the project before?
I did.
Former life,
and a couple of, yeah, I did. And we'd been developing something else, but we'd stumbled along probably something that made us, think that this could be done simpler. And initially we were trying to use an Albion process that needed $260 million capex, and it was just all too hard. And then we just went back to basics. We pulled on a couple of very good consultants. We did a lot of test work. In fact, NQ did a lot of test work. And we came up with the simplest way of just run it through as a sequential float, do a couple of regrinds, and it was very commercial. It was just keep it simple.
And then how come the company ended up in London, or with a London listing?
Yeah, well, look, our founder of NQ was I guess the guy that got this project going. He was keen to list it in London, and he spends a lot of time in London, and felt that that's where he wanted to start it. And to be honest, it's been very good to us. We've done very well, and we've raised money at the right times, and I think we're about to take off as far as share price goes. But so far everything's been good, and I'm pretty pleased. Unfortunately, it's a bit of a trip. I only just flew in today. It is a bit of a trip from Brisbane, but other than that, it's all good. Beer's good.
You're doing very well. And tell me, do you have 100% ownership of the Helia project?
Yeah, we've completed the sale, but the last tranche is to be paid in the next 4 to 6 weeks. So, that hasn't really stopped us though. That we've actually been getting a lot of things done in the background. We took the risks, thinking, well, time's going to be important. Whilst we've been raising the money to buy the project, we've actually been getting the mill started up and getting it refurbished. So even now, as I speak, there's guys down there getting the plant up and running. So we're pretty confident we're going to hit that March deadline next year to be started up.
Do you have any questions? Gentleman here, please.
What did the project economics assume for both metals prices and reclamation cost?
Well, with metal prices, we were 1,250 Aussie with, $1,250 US with gold, $17 with silver, $1,900, Mike.
There were 3-year historic averages.
Yeah, so previous pricing and reclamation cost, as in the dredging price.
No, the cost to, I don't know what the legislation says, removing the plant at the end of the life of the project.
Oh, okay, sorry, the rehab cost. Yeah, well, there's two sides to that. One is that what the government says it will cost you to do and what you have to put in as a bond, and it's a couple of $1 million, but we've got about $5 million in there to do it. The interesting part about this project is we're actually cleaning it up, and we're also it's a tricky one because we're not actually depreciating the asset. If you have an empty tailings dam on one of the best and most prospective VMS deposits in Australia, you're building up an asset. So at the end of the tailings project, we can rewind the clock, start mining another VMS deposit, and start filling the tail dam up again. So, yeah, whilst we are putting money towards that, the reality is that we'll be mining for 10 or 20 years after we finish this project.
Thank you.
And the sums that you're talking about at this stage, and I'm sure nothing's easy, but 15 million US, 20 million Australian, we hear about companies looking for hundreds of millions to get projects off the ground. Do you suffer that the numbers you're asking for aren't large enough, or that people don't take, as a story, it's not big in terms of money? Does that make sense to the question? I don't know. Or how are you finding the response so far, talking about raising that sort of
people?
funds?
Yeah, well, people would look at this and go, that's quite low, in the scheme of a mining project that turns over, will turn over the next 10 years 1.3 billion Aussie dollars. To spend only $20 million, and keeping in mind part of that's, if we dig into it, there's contingency and part of it's working capital, is a very low number. But essentially what we've done is we're only going to be doing a little bit of plumbing in the plant itself. The kit that you saw in that video is all the kit we're going to use. We have to buy one filter press, and we have to fix the dredge up, and we have to do a bit of plumbing. So capital-wise, we're talking about $3 or $4 million of hardware.
And could you find presentation from Central Asia was talking about having an offtake partner or a customer who then takes responsibility for that product, who would be able to help you with that sort of funding?
Look, and we could be the same. We're with lead and zinc at the moment. They're pretty hot. There's quite a few companies chasing those products. We are talking to offtake partners, and certainly there's bids on the table there. But we don't necessarily have to go down that route. We could sell it directly. I have direct experience in selling concentrates myself as a CEO, and without going through an intermediary. But sure, we're in the process at the moment. A lot of these offtake agreements, you don't really strike them until you get very close, because you've got a bit more leverage then.
I understand. You get a better deal.
Yeah.
Okay. Well, Roger, I think we're out of time.
Okay.
Thank you very much indeed.
Thank you.